Good afternoon, welcome to Market Wrap. Stuart Williamson here at the helm, APW. 2023 house prices defied expectations. High inflation, rising interest rates had everyone expecting an almighty crash. However, nothing seems to have occurred. The Halifax and Nationwide are both down by perhaps 1%. Similarly, the average for the next 12 months, people are looking at the same sort of thing and saying, is the same sort of fall is going to happen? So I thought this week we'd look at what the different mortgage houses, what the different property houses are saying, and what they do believe is going to happen. So firstly, let's look at the Nationwide. They believe that house prices are still likely to record another small decline or remain broadly flat over the course of 2024. That's what the biggest building society in the UK, Nationwide, says. The actual quote is, a rapid rebound in activity or house prices in 2024 appears unlikely, while cost of living pressures are easing. With the rate of low inflation now running below the average wage growth, consumer confidence is still weak. Surveyors support this, reporting continued subdued levels of new buyer inquiries. Moreover, while markets are projecting the next bank rate will be down, there are still upward risks to interest rates. Inflation is declining, but the measures of domestic price pressures remain far too high. That's not very positive. What does the Halifax say? They believe house prices will fall between 2% and 3% in 2024. Halifax says pressure on household finances, predominantly from inflation and higher interest rates, has impacted housing affordability, leading to fewer sales and modest price falls. Kim Kinnaird, a director at Halifax Mortgages, said, overall, with the combination of cost of living pressures and interest rates levels that are still much higher than even 2 years ago, we will likely see continued mild downward pressure on house prices. What do the property portals say? Well, Rightmove predicts that the average asking price of a newly listed home will be 1% lower by the end of 2024, as the market continues its transition to more normal levels of activity following the frenetic post-pandemic period. Motivated sellers are likely to have to cut prices more competitively to secure a buyer in 2024. The property portal thinks the market will settle but remain elevated, tempering some buyers' budgets, especially in the low to middle market sectors. It's still going to be too expensive for what people perceive as the right price. A year ago, Rightmove predicted average new seller asking prices would drop by 2% in 2023. They're currently 1.3% lower. So not all predictions are correct. What does Zoopla say? Zoopla says the jump in mortgage rates over the last 18 months has been a primary driver of the current overvaluation in home values. Again, things are too expensive. It expects UK house prices will fall because of this by 2% in 2024. We assume mortgage rates will fall to 4.5% by the end of 2024 and remain at that level into 2025, they say. Richard Donnell, who's the Executive Director of Research at Zoopla, says house prices need to fall further, incomes increase, or mortgage rates will need to fall further to reset affordability and support demand for sales. In Zoopla's predictions, we assume mortgage rates will fall to 4.5% by the end of 2024 and remain at that level into 2025. The number of homes actually for sale is at a 6-year high, meaning sellers will need to price more competitively if they're serious about selling. This is likely to keep pricing under pressure. Faster growth in household incomes in 2024 will support affordability, but leave housing slightly overvalued still. Households are taking longer mortgage terms, which would remove this overvaluation. The outlook really hinges on a trajectory for mortgage rates and how lenders assess affordability in 2024. Again, a mixed bag of results. Now, what do the estate agents say? Jones Lang LaSalle, property prices across Britain will probably fall between 2 to 3% by the end of 2024, according to real estate brokerage. It anticipates a bottoming out of prices in mid-2024, but says falls early in the year will outweigh second half increases, resulting in a single-digit annual fall by the end of 2024. Marcus Dixon, a director of UK residential research at JLL, says, despite the uncertainties faced by the UK property market, we have seen resilience and stability over the last year. Looking ahead, we forecast a bottoming out of prices in 2024, with single-digit annual falls are likely. The UK housing market still faces challenges in terms of supply, with a cumulative shortfall of 720,000 homes expected between 2023 and 2028. Addressing these structural barriers is crucial, he says, for achieving meaningful increases in supply and mitigating affordability issues. What do Chesterton say? Chesterton say, reflecting on the sluggish economic outlook, their projection for house prices over the next year is subdued, although it says any interest rate cuts or tax incentives could quickly change that. It is forecast in UK house prices will experience a slight decline of 0.3% in 2024, while London prices will show growth of 1.8% due to the high number of cash buyers that are less affected by the higher interest rates. And that's interesting you say that, because in the press today they're talking about abolishing inheritance tax before the next election and having a first-time buyer stamp duty freeze, and in fact freezing stamp duty altogether. And that would be a typical political move which would completely blow all these predictions out of the water. Anyway, Chesterton's go on to say, although the era of super low interest rates is now behind us, with a degree of pain of some owners transition from lower rates to current rates, the Bank of England is now likely to raise interest rates further. It's even predicting small cuts in 2024, 2025, which should allow the property market to recover as mortgage rates fall. Beyond this, the drivers of house price growth are somewhat muted. Despite falling inflation, economic growth has stalled. In fact, we are technically in a recession, I believe, at the moment, and is not expected to recover quickly over the next 2 years. And unemployment is slowly creeping back up. In addition, a general election being called at some point before the end of next year creates added uncertainty. Added uncertainty, especially for the top end of the market, which is often affected by changes to tax rules. Hamptons, what do they say? Again, it's predicting house prices will remain broadly flat in 2024. The property firm says it looks increasingly likely that mortgage rates have peaked and a gradual decline will occur over the next few years. It says this will keep house prices from falling further, and it expects 0% annual house price growth across Britain next year, assuming no other major shocks to the economy. Now bear in mind, all this is averages. If you look at the moment, I did some research this week on Southampton, and Southampton house prices are falling by 5 to 6% this year. I looked at Muswell Hill, they were flat, but up in the north, things are looking as if they're going up still in Birmingham and Manchester. Interest rates above 5% will be painful for some households, says Anisha Beveridge, a research person there. But more important, economic stability and improved affordability should mean that some people who have delayed relocation in 2023 will decide to proceed. We also cannot see much, Ms Beveridge says, improvement in the supply of new housing given the pressures facing house builders, which should support prices. That said, political uncertainty could be heightened as a general election may take place towards the end of 2024. House prices in the south of England are set to return to growth at the end of 2024, but price falls may continue in the north, which is the opposite of actually what is occurring at the moment. So I find that quite hard to believe. With two fairly centrist leaders, the two main political parties, an election is unlikely to have a significant bearing on housing market activity, although the prime sector may be a little more fragile. Over the past 8 years, major political events have had less impact on prices and transitions than was the pattern in the past. Instead, affordability will be the key driver in 2024. House prices in the south of England are set to return to growth by the end of that period. We forecast that growth will be strongest in the east, the southeast of England and London, as lower mortgage rates have a potential to create a bigger bounce back. So that's interesting. It goes against everything our research has been telling us. So what about Knight Frank? Knight Frank says anyone buying or selling or remortgaging a property in the last 18 months has faced a market volatility caused by the mini budget and inconsistent inflation data. The cost of borrowing has lurched erratically and sentiment has been eroded. This has put downward pressure on house prices and, to a more noticeable extent, transaction volumes. Now, some stability seems to have appeared on the horizon. The Bank of England has held rates at 5.25% for 3 consecutive occasions. Next year we expect prices to fall by up to 4%, but less than what we forecast last year, as the economy stabilises and speculation turns to when the first small rate cuts will come. Improving positivity and sentiment is the key. The number of people moving from lower fixed rate mortgages will not fall in 2024, but the backdrop will not be such an economic flow of economic data and 14 consecutive rate rises. That said, a general election is likely in 2024, and uncertainty ahead of any vote typically suppresses demand. Savills, what do they say? UK house prices will bottom out next year, 2024, falling by a maximum of 3% according to Savills. Cost pressures and higher mortgage rates have dampened the housing market this year, but Savills claim borrowing costs will ease in the second half of 2024. The estate agent said the market was past peak pain and that housing prices are held up slightly better than expected in 2023. Property transactions are expected to remain at around 1 million in 2024, which is about 25% less than it was last year. Lucian Cook, head of resident research at Savills, says interest rates are expected to have peaked and the worst of the house price falls looks to be behind us, but the first cut to rates may still be a long way off. This means continued affordability pressures are likely to result in further modest house price falls over the first half of 2024. The expectation of gradual reduction in rates suggests a progressive restoration of buying power and steady recovery of demand. Jackson Stops, finally, they expect UK house prices to fall in the same way. It's a continued conversation about what they expect to happen is going to be probably some dips up to about halfway through the year, and then it starts to pick up again after that as interest rates and positivity kicks in. And that's what it's all about. But can you take this research for reality? There's many wider factors include, about what the government, if they get rid of inheritance tax and they do a stamp duty holiday, I can imagine that the whole market will go berserk, and it will be a very positive takeoff. And if we compare all of these predictions to what's happened in the past, if we take COVID, for example, therefore at the beginning of COVID we might have a major house price fall. Well, that didn't occur. The more important thing when looking at property is you buy for the right reasons and you put enough money down, which means the whole thing will wash its face. Make sure we have a deposit of, I'd say, 30% plus. Then even if interest rates for some terrible reason start going back up again, you're still going to be covered. Rentals will continue to rise. And if that is the case, then that will make it a much better situation to have a buy-to-let. The buy-to-let market is shrinking at the moment because for UK tax residents, it's not as tax efficient to have a property as it was previously. It isn't as good for them. For people offshore, it's a different cup of tea, especially using an SPV, single purpose vehicle, to buy. So should you trust house price forecasts? No. Should you trust what I'm saying? We'll take it with a pinch of salt. I do my best to try and look at the research and see what's happening, but public sentiment is a very important thing. At the moment, that's quite negative. The whole of the UK, I'm here at the moment at Christmas in the UK, and the whole of the UK is quite negative. But it wouldn't take much to turn it all around. The logical conclusion is, don't take for granted what other people say. Advice is cheap and easy to give. Always do your research. Look around, see what the best thing is according to your feelings and your research. Thanks for watching. Do share if you get an opportunity. Hope you had a good Christmas, and going into the new year, I hope you have a good experience. Take care. Bye bye.